Well, several times a year, companies provide insight on the trends that they're experiencing and what the near-term future looks like. And this is one of those times. These forecasts are very important to gauge the outlook for jobs, both locally and nationally, while giving us a clear view of the health of the local, national, and global economy. So, as first quarter earnings are released, we thought it would be good to check in to see exactly what the numbers are suggesting. So for insight, we turn to U.S. Bank senior equity strategist Jim Russell for this morning's U.S. Bank Economic 360. Jim,
good morning, sir.
So these numbers are starting to track. What are they showing?
Well, there are a couple of different things that we get from these numbers, Brian. First, of course, we get a report card on how the companies did on a backward-looking basis for the first quarter. Of course, the first quarter ends on March 31st, and here we are in mid-April. The second thing that we get, as you mentioned in your introduction, was a glimpse as to what happens next, the forward-looking statements by management. Now, this is where jobs come into play. Because of sequestration cuts and other cuts in the public sector and government cost pressures, it appears that the private sector companies will be really the key growth for jobs on a go-forward basis. So we want to see these companies healthy, profitable, and growthy on a forward-looking basis. So let's take a look at what the first quarter shows us in terms of expectations. Now, what we see is that first quarter expectations for first quarter earnings have come down materially over the last several months. Initially, expectations were for about 8% type of growth in July of last year for the first quarter of this year. Now we're seeing about less than 1% growth, so 0.7% year over year, first quarter of 2013 versus 2012. Let's take a look at maybe what 2013 full year earnings look like. A little bit more healthy, a little bit over 7% year over year growth. Let me tell you that we do think that first quarter earnings will be exceeded in terms of what reality matches up against expectations. We expect 3 to 5% growth in the first quarter, not the 0.7% as indicated by the expectations.
Yeah, that growth doesn't look all that strong, and yet the stock market is hitting record territory. Can you explain that?
This is how things work, Brian, and that is usually when the economy is on fire and the economy is booming, job growth is great, earnings growth is very strong, GDP growth is strong. That's when the Federal Reserve steps in to slow the party a little bit. What we have now is really the perfect set of conditions for the stock market. Slow but improving domestic and global growth, very low interest rates, improving profit margin type of activity. Global growth is also on the same trajectory. So we have really a number of things that are working forward for the stock market. Yes, earnings are not all that strong right now, but they are improving. We look for 6 to 9% growth for the second, third, and fourth quarters as we move forward.
What can we expect from companies in terms of their future trends?
You know, we're going to see a couple of different things here. There are 10 sectors that make up the S&P 500, and there are a couple of sectors that are expected to do particularly well in the first quarter earnings releases. You can see those right now. Consumer discretionary sector, that would include companies like Macy's here locally, and all retailers expected to be up about 8% or so. Telecom services, that would include, of course, companies like Cincinnati Bell, up around 9%. So those are the top two sectors. There are a couple of sectors that are expected to kind of maybe be the bottom two sectors of the 10 in the S&P 500. You can see the industrial companies in general are not expected to show strong profit growth. That would include companies like General Electric here locally, and technology companies are right around 1%, maybe a little less than that. That would include companies like Apple Computer. I think the companies are going to tell us that profit growth is challenging here in the first quarter, but they're a little bit more optimistic in the second, third, and fourth. And secondly, revenue growth is hard to come by, as pricing is very difficult to move a little higher.
All right, Jim, a good assessment of our move from the first to the second quarter. We appreciate you and U.S. Bank.
Thank you.
Thanks to Jim Russell.